Let's bring in Cathie Wood, the ARK Invest CEO. Tesla is her #1 holding in the ARK Innovation ETF. Cathie, great to have you with us here on Fast.
Oh, I'm happy to be with you, Melissa. Thank you for inviting me.
You know, the traders and I were talking here on the desk about Tesla and how your bear case for Tesla is $1,400 a share. Guy here said he'd take $1,400 because that's still pretty bullish. What is in, let's just even say, the bear case? What assumptions are made about its business to get to that $1,400 by 27 number?
Well, about a third of our valuation is associated with electric vehicles, EVs, and scaling them. And as you mentioned, Turkey, a plant there, many countries do want a Tesla plant because this is the new world, right? So that's good. This is all working out. And then then 2/3 of our valuation is around autonomous and autonomous taxi platforms. We think Tesla is in the pole position here in the United States. It has collected more data about our roads and actually other roads around the world than all of the other companies combined. And therefore, it has more corner cases and probably will be the company that will get people from point A to point B as quickly and safely as possible. So it's a winner-take-most market. So whether it's our base case, that just means, okay, autonomous perhaps takes a little longer to play out, or the bull case, it happens much more quickly.
So even if it takes longer to play out, it's still 1,400. And that seems extremely optimistic in terms of even the regulatory green lights that Tesla would need for autonomy. It seems also, that the model where Tesla owners would own their cars and then they would go out and earn them money during the day by driving people around, that also seems sort of optimistic in terms of the uptake of that, Cathie. So, for 2/3 of the valuation, do you feel like that there's risk even around the bear case at all with the 2/3?
Well, actually, the risks are going down because regulators are very data-driven. And what regulators have been experiencing, especially in the transportation sector, is that the number of auto deaths in the United States has gone up during the past 5 to 10 years from 30,000 to 45,000 after decades of falling thanks to auto safety measures. So the National Highway and Transportation Safety Board and other transportation authorities want to turn that trend back down. Why has it happened? A lot of it is because of texting, and therefore a disproportionate number of young people are dying in auto accidents. So the data supports what Tesla is doing. 80 to 90% of all accidents on the roads are caused by human error. If you take the human being out of the equation and use AI to get people from point A to point B as safely as quickly as possible, I think the authorities, the regulators, are going to be persuaded by the data. In fact, they already have been in terms of the fatalities in Tesla's cars. They examine them. They say, not Tesla's fault for the most part. And oh, by the way, people driving in Tesla cars are 40% plus safer with autopilot and FSD than in other cars.